Hey traders, Jason here from Leavitt Brothers. I'm going to do an update of my State of the Market series, but first, a quick announcement. I'll be speaking for the Money Show, the virtual Money Show that is, on Tuesday, November 17th. So if you're watching this on Sunday when I send it out, that's in 2 days. It'll be at 4:10 Eastern Time, so 10 minutes after the market closes. The title of my talk will be Trading Strategies with Moving Averages, MACD, and Stochastic. In the past, I've talked a lot about background theory and like how do we even approach the market in the first place. In this talk, I'm going to be talking about specific trading strategies. Okay, you only need one strategy that works for you to make it in this industry. So who knows, of the handful of strategies I'm going to be talking about, maybe there's one that clicks with you. Okay, there's a link below that you could use to register. All right, let's move on. We're going to check out what the state of things are. Okay, earnings season is over, the election is over, one by one major events are taking place. So I'm going to take a quick look at the index charts, and then I'm going to look at a few breadth indicators to get an idea what the technical picture is. All right, let's get started. So here's the S&P 500 from the beginning of the year. You can see a big drop, big rally. So I'm drawing trend lines kind of like this. Okay, so we had a huge rally consolidation pattern for, 1, 2, 3 plus months. Last week, on virus vaccine news, the market broke out. New high was hit on Monday. Then the market basically spent, the rest of the week trading in a range. This looks great. Trend is up, new high, volume over here really good. From a technical standpoint, everything looks good here. Here's the Nasdaq 100. It is similarly structured. It did not make a new high, but it's still doing really well. I'd probably draw trend lines like this, flat there, uptrending there. You got this high over here to deal with, but otherwise, similar thing. We got a strong rally, a couple months of sideways movement. Trend lines compressing the price, but not too much yet. This is a market strong. It's trending up. There's nothing wrong here. Even if this, trades sideways for another month or so, nothing wrong with that. Okay, got to have patience. It's not going to move when you want to move. It's going to move when it wants to move. But I view this as a strong market, trending up, acting very, very well. Here is the Russell 2000 via IWM, because Stock Charts doesn't have the Russell anymore. So the small caps were lagging for a while, okay, but we finally got a breakout here, which took out the highs from earlier in the year. So, for a while it seemed like the small caps were lagging. They're not lagging anymore. They're at new highs, just at new highs or near new highs, just like the other indexes. So everything looks great. Okay, large caps doing well, tech stocks doing well, although some money is coming out. Small caps doing well. The market, in my opinion, per the indexes, is strong. It's healthy. It's trending up. It's doing fine. I mean, if you use the indexes as a green light, red light type system, the light is green. All right, now let's look at some breadth indicators. All right, here is the S&P 500 up top, and then we have the 10-day, 50-day, and 200-day moving averages of the Nysc AD line, okay, the advanced decline line. So when the market trends up, you tend to get, from the 10-day, you tend to get oscillating motion, not oscillating motion, but some up and down movement, most prints above zero with occasional drops below. Divergences do tell you that negative pressure is building, and it tends to lead to pullbacks. But as long as you don't get a big pullback like we got over here, the market can just trend up when the indicator's doing this. So far over the last few months, that's exactly what's happened. We got a dip here, move up, dip, move up, dip, move up. Right now we're sitting at like highest level in several months. So this is good. The market moved up. The advanced decline line moved up to its highest level. Things look good there. The 50 has been trending down. A little bit of a warning. It's done well this month. So if the market here is going to go up here, I'm going to want to see the 50-day move up here. Doesn't have to go back to the high, but just move up. I don't want to see it trending down. And then it'd be nice if the 200 also moved up too. Okay, so for now, I don't see any warnings here. Nothing major, nothing urgent, nothing that has me like really, really nervous. Let me get rid of these. If the 10-day was over here and like struggling, then I'd look and say, hey, we got a negative divergence forming. It's a little bit of a warning. But with this print up here, I think the market's in good shape. The cumulative line, so it's the last, the last charts were the moving average of the daily prints. This is the cumulative line, so it just adds it up day by day. It's been trending up. It traded above and below its 50-day moving average for a couple months, but now the trend up continues, and the print last week was at a new high, so everything looks good there. Okay, if we do get a pullback, it'd be nice if it found support over here at its 50 and bounced. That would be super, super bullish. Okay, we'll see what happens, but for now, it's like we have a new high. We have higher highs, higher lows, and the indicator closed at a new high last week. Here is the Nasdaq versus the 10-day, 50-day, and 200-day moving averages of the Nasdaq advanced decline volume line. Okay, so where the 80 line is just advancers and decliners, it doesn't matter if you're Apple and you're the biggest company in the country, or you're a small cap stock worth 500 million, you count the same with the advanced decline line. With an AD volume line, it counts volume. So you could be Amazon and trade a lot of moving, or you could be a $4 stock that trades a lot of volume. But for the most part, the bigger companies have more volume, even if they are more expensive. So sometimes it gives a little bit of a different picture. So what I see here is Nasdaq made a higher high last week, but the 80 line, the 10-day of the 80 line put in a lower high last week. Not a major concern because the divergence is happening at a high level. Okay, divergences that tend to be really powerful are ones where, like over here, where the second hump is down near zero. Second hump is down near zero. Okay, a little bit of one here, but it was at an elevated level and it didn't really lead to much. Okay, so even though a divergence formed right here, because it's taking place at such a high level, I don't think it's that big of a deal. The 200-day at a new high. The 50-day, it'd be nice if the market tries to rally, if this thing can move up again. Okay, it doesn't have to trend up constantly. Doesn't have to, it'd be nice if it can just like maintain a high level, but this is not too bad. Okay, so a little bit of a warning here, but otherwise things look good. All right, here is the cumulative of the 80 volume line. Okay, up, 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 no warnings whatsoever. It just keeps going. So nothing to worry about there. Okay, now here we have NYSE new highs and Nasdaq new highs. In both cases, we had really high prints recently, and in both cases, these were the highest prints going back a year. Okay, so any type of talk in the past about lack of participation, the market is being pulled higher by a smaller number of large cap stocks that are doing really well while the small caps stay behind. The advanced decline line is lagging, blah, blah, blah. We don't have enough new highs. You can throw all that out the window because last week or in the last 2 weeks, we got spikes in the new highs at the NYSE and at the NAS. So that tells you participation is good. And a lot of stocks are on board. It's not just a couple stocks pulling the market ahead. There's a lot of stocks that are participating. All right, here's the SP 500 up top. What you see, let me see if I can mark this up. So in this middle pane, you have percentage of, not middle pane, but second pane, percentage of SP stocks above their 20-day moving average, percentage of SP stocks above their 50-day moving average, and percentage of stocks above their 200-day moving average. Okay, starting with the 200, you can see it oscillated nicely, boom, 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 supporting the market, not too strong, but always staying above the 50% line. And then recently we got a breakout to a new high. So right now we have like almost 84% of Nasdaq or of SP stocks are trading above their 200-day moving average. Okay, so that's good. For the 20 and 50, they've been, as the S&P has gone down and up and down and up, these indicators have rolled up and down. Also, right now they're at the highs of their ranges. So maybe you can say short term they're a little bit overbought, but overall this is, market strong. It's trending up. It's got good participation. You have like 86% of stocks are above their 20. You have 87% of stocks are above their 50. That's good broad participation out of 505 stocks in the S&P. When you have like 86, 87% of stocks above these key moving averages, you're talking about more than 400 stocks. So there's a lot of stocks that are participating in this market. So there's not a whole lot of, there's no major warnings here. Okay, so I would say the good is the market is strong, it's healthy, it's trending up. The internals support the strength. And if left alone, the trend would continue, and I put my S&P 500 target at 4,000. The bad is there are positive virus cases are ramping up all over the country, in a lot of parts of the world. So this is the elephant in the room. So so far the market is absorbing the news very well. You'd think it would be falling, but it actually hit new highs last week. It's like I'm not the only one that knows cases are ramping up. It seems a little odd that the market has done so well, even though cases are ramping up. But that's a good sign. But I wonder at what point in time like a threshold will be crossed. Okay, if indeed cases get really big, and if indeed local governments continue to shut things down, at what point in time will money come out of the market? That's what I'm wondering right now. So right now my bias is alongside. Being long is the only place I'm looking to be right now. I'm not looking to go short at all. So I'm long with stops in place, period. Okay, if the market drops, fine. I'll step aside and then buy at lower levels. Okay, and I'll actually welcome that. I love the opportunity to say, here's an $80 stock that I love. And if the market could take a big hit and I could buy that $80 stock down at 68 or 65 or something like that, love it. Because then I'd make 15 points on the way up to the high, and then I can make another 15 or 20 when it breaks out and goes up to 100. So I'd rather buy it 68 or 65 than 80. So again, if the market drops, I'll step aside and I'll look to, I have no problem like cashing out trading positions and then just stepping aside and just waiting for better entries. So from a technical standpoint, the market's in great shape as long as the virus doesn't get out of control, which absolutely is no guarantee because it actually looks like it is getting out of control. The market will do well. All right, thanks for listening. Quick reminder, I'll be speaking on Tuesday right after the market closes. Trading strategies with moving averages, MACD and Stochastic. Hope to see you there. All right, have a good day.